Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. Sorry, I'm doing this at like 5 after 4, so I'm not going to be able to update you after Apple or after even Twitter. But I'll tell you where we are as of the close. And where we are is, again, holding on to support with a lot of divergences across the board. A lot of mixed action depending where you look, which is what happens during earnings season, because some companies have great earnings. Well, actually not a lot of them this quarter. Anything that's deemed as good is because of cost cuts and restructuring. But at this point, if they're bad, like we've seen a few of these companies get put in the penalty box, you've had some downside follow through, and there's been some technical or tactical things to do. So let's look real quickly where we stand in the S&P. The S&P still is doing a decent job trying to consolidate. Last big level it got above was right here when it took back the 200-day and crossed above this descending channel. Obviously, we're well above this double bottom here where you had your commitment to the first move off the lows, and we've now been in this trend, and this trend off the lows has been very strong. So with that said, you can't get too bearish if we continue to hold above the 21-day moving average. I said the same thing right here. You can't get too bearish if we hold the 21-day at 2040 before going up. So if you take a closer look here, to see the levels and see it a little closer up with the numbers. So really, as long as we continue to hold above this 2077, you can't get too bearish. And then maybe, who knows what happens tomorrow with the Fed or with Apple, etc. Here is the old high. So we'll see what happens next here. If you try and look for clues across sectors, it's been a little difficult because tech has been weak, but then you have the Russell, which has been stronger. Today the bios were a little weaker, but then you had energy also strong. So, where is the baton? And that's your job as a trader to figure out. So as of right now, you look at the Qs, still a bit pressured, and I guess we'll see what's next here when Apple comes out. Here is the ascending channel that's been broken to the right side. So the question is, does this hold? Okay, we'll see, I guess, tomorrow. There's still a gap here that it's below, so it's on the right side of the trend, which tends to be a little bit more faulty than constructive. But if this were to take this out tomorrow, that changes. The bios changed a little bit today. Not crazy, but ever since it took out this this lower end, okay, it's been acting very well with a pullback to this red dog reversal here, and now we're approaching a pretty big level here. So at this point it was the last sector to rally. So when a stock or the markets are near resistance and you're looking at the last sector to get on board, it's typically a laggard sector, so you have to be a bit more careful. So we'll see what happens here. I would say this is a momentum line in the sand, and this support here now is 278. So see what happens there. And this sector still, look where it is. It's, well off highs, broken here, broken there, and now it's trying to figure out if it could retrace and see the 200-day, which a lot of other sectors have done. And we've talked about the penalty box, companies that missed the report, that are priced for great reports, that gap down and don't fill the gap and continue lower. First one, which we talked about, was Netflix. Netflix was the first stock to come out, and it basically, broke this ascending channel, created a huge hole here, and then gave you a little bit of follow-through selling to the downside. So today, on Twitter, I was like, what, we got to see what happens with the other ones. So what you want to do is after a big earnings move lower, you write down, the potential pivot. First time it got here, couldn't break below it and gave you a little red dog reversal, and then it couldn't hold this and gave you that H pattern to short. So this would be the perfect H pattern where you have the pole to the downside with a huge gap unfilled, giving it power. It came up, you shorted when it came back below the prior high, and then you said, I'll use this as a stop, and if it happens to break below another threshold, maybe you add to it. And it gave you a little bit of downside follow through before bouncing a little bit, because I'm sure people are worried if Apple's going to come out, maybe things bounce. But anyway, here's a continuation pattern. So I said, what else could give you a continuation pattern? And that was Google. Google also, was kind of priced for perfection, priced to take out the highs here on a great report, and the report was far from it. So it gapped below support, put a pivot in. Here is your pivot low from earnings, and this was a nice short for a lot of people that played it to the downside for some downside follow through. Gap never got filled. Really didn't give you a spot to short on the H, but gave you a pretty clean move. If you shorted it below 730.37, it went as low as 720. That's 17 points below, or sorry, 7 points, below, or something like that. I have a lot going on below this area, so it was a quick short. So now the question is, does Microsoft follow the same suit? This too was, priced for perfection. Everyone was hoping for a strong report, strong guidance, take out the old highs here, and what happened? That didn't happen. Okay, it failed there, gave you a big hole, unfilled, and now we'll see if this post-earnings pivot holds or with the 200-day or it breaks below. So pretty important spot there. One of the names that actually acted better, that was buyable, was your IBM. A little different. Okay, IBM, the day after the report, matched the downside candle and then got above the earnings gap pivot. So you have post-earnings low, and then your gap pivot. Why is it a gap pivot? Because above this you have a whole gap, and it kind of got filled, and now it's hanging out here. So it looks a little bit more constructive than the other tech names that I showed you. So I guess making this a value versus growth. Today I actually made a little bit of money shorting Facebook. Facebook to me has been a little weaker, has earnings tomorrow, so I covered just to be safe. It did break below this 109 area, got as low as 108 and change before coming up a little bit. I didn't want to be short into what's it called, Apple, so I covered it. But either way, I think people are a little worried that this is priced for perfection too, considering if you look at Facebook, and I know it's biggest growth company out there, but look at the size of the move that this has had since this cup and handle. By the way, I haven't showed you this in a while. If you want to Google Scott Redler, Jim Cramer, cup and handle, I was talking about how this can get back to the post-IPO highs when it was down here. And it wound up working out well, and then it's been in a great trend ever since, but it's priced for perfection here, so you got to be a little careful. So either way, I think traders are a little hesitant going into tomorrow, so we'll see what happens there later. Now it's 4:15. I'm not sure what's going to go on with Apple, but Apple is pricing in a 4.5% move. So at this point, the question is, did Apple price in the ratcheting down the iPhone sales enough by breaking it below the 200-day and everything here to get it into the 50-day right there? I'm not so sure. But if it is less than 50 million iPhones, I have a feeling it's going to come into this spot, which to me, we'll see if it holds. I would price in the straddle, and then if it's above 52 or in line and they want to try and rally it, here is your potential resistance spot. So here's that gap. So you have 109 on the upside, 100 on the downside, and we'll see if who wins in the middle. I'm probably not going to be trading this tomorrow because I have to be on a 4:45 ferry, but we shall see. And as far as Twitter's concerned, kind of tight here. I don't think anyone in the world is thinking it's going to rally. I have some $18 calls on just in case, which cost me almost nothing. And we'll see what happens, and we'll know more tomorrow. So sorry to be quick, but all in all, we've had about a 30 handle pull-in from the highs. We have the Fed day tomorrow. Earnings haven't been great. Lots of holes in a lot of the leadership stocks, bunch of divergences, but things aren't falling apart. Banks had a little bit of a bid today because I think everyone thinks the Fed might be a little hawkish. So if you were looking to be in some banks, I'm actually in Morgan Stanley and Citigroup just for a trade. I'm thinking that if we do rally tomorrow and they want to take these for one more push, this bull flag could go towards the 200-day in Morgan, and the same for Citi. That's right even closer. This had a nice potent move since its earnings. It also passed that stress test. This was one spot to buy, and now it's holding the 8-day, so maybe it sees a little bit higher prices. Keep moving and grooving during earnings season. You have lots of things to be long, things to be short, but make sure whatever you're in for a reason. See you tomorrow morning. Have a good night.